I'm about to share a very effective risk management strategy which you can use to pass any prop firm challenge. This risk management strategy is something I use myself and it has been tried and tested. I'm so confident with this strategy that I've been able to pass hundreds of prop firm challenges in a space of 1 to 2 weeks. But if you execute this risk management strategy properly, you can pass it in 3 trading days. In fact, I've shown all of this proof with trading history on my Instagram. So let's show you guys right now. If you go on over to my Instagram and then you go to my highlights over here, this is me getting out of my phone. Then you go under the prop trading highlight. You can see I've shown a lot of trading history, and right over here, let's bring it up. Right over here, let's make this bigger. If you can see, I'll pop it up on screen as well. Literally in 2 trades, I've managed to pass this challenge, and I'm going to show you exactly how to do it. You can go on my Instagram and you can see many trading histories like this where it literally takes me 2 trades to pass the challenge and then a single trade to pass the verification. So that's phase 1 and phase 2 passed in 3 trading days. Now, how have I managed to do this so effectively and so consistently? Now, this comes down to a simple risk management strategy that I use. What I would do is I'll risk 2% to make 4%, just aiming for a 1 to 2 risk to reward. Now, by hitting the take profit, that's easy 4% made for the day. The next trading day, I'll come back on the charts, and if I see a good opportunity again, I will then take another trade risking 2% to make 4%. So just in 2 trades, I've made 8%. This is why you want to go for prop firms which are offering an 8% target for the phase 1 instead of going for FTMO, which is offering a 10% target. Now, when it comes to phase 2 or the verification stage, you want to hit 4 to 5%. Now, it does vary on different prop firms, but generally 5% is the standard amongst all prop firms. So in this case, you'd want to again risk 2%, but aim for a 1 to 2.5 risk to reward. Only take a setup if you're confident that you're going to hit a 1 to 2.5 risk to reward, and that will give you a 5% profit in one single trade. This is why only going and taking high probability setups is what you want to aim for once you take the challenge. Taking low quality setups and risking unnecessary amounts of money is not the way. What I'll personally do is I'll wait weeks, even 1 to 2 weeks before I would even take a very good setup, because once that first trade is taken, that's when your 30 days will start. So the first trade will only be executed if it's a high probability A+ setup, and that will be an easy 4% winner. Now, another thing I would like to mention as well is as soon as you hit a 1 to 2 risk to reward, this is where you want to close out your trade. Don't get greedy and start holding it for a 1 to 3 or 1 to 4. The next thing you know it, the price is reversing and going against you. So stick to a consistent plan, risk 2% to make 4%, and as soon as you hit a 1 to 2 RR, that's exactly where you want to close your trade out. Now, adding on from that, since you're aiming for a 1 to 2 risk to reward, that is just a standard risk to reward that everyone should be going for as a bare minimum. A 1 to 2 is a minimum risk to reward that everyone should be aiming for. And for this exact reason, you want to make sure you got a nice breathable stop loss. So once you've set out a nice target and it's looking like it's a 1 to 3 or a 1 to 4 RR, just to be safe, extend that stop loss a bit more so it's nice and breathable, because you're only really going for a 1 to 2 anyways. So what I personally do is I'll place my stops below the low or the high depending on whether I'm looking for buyers and sells, and then I'll use the ATR indicator, which is the average true range of that price movement, and then I'll add that extra pip below the low to make sure I've got extra room in case it starts to try and manipulate the lows or the highs of the area before falling in the direction I want. And I found this to be very effective. Other than that, the only other tip I can give you is to make sure you have multiple confluences before you're entering a trade. Regardless of what your strategy is, you need to make sure you have multiple reasons as to why you're entering that trade for either a buy or a sell. Personally, using the trend is one confluence, as it helps to build confidence in the fact that it will be traveling in that direction, and then using moving averages is also a nice confluence to add to your trading strategy, as well as looking for wick rejections at certain areas to make sure that price is holding that level before taking the sell to see that drop down, or taking a buy to see that follow through to the upside. So all in all, I will highly recommend all of you guys to be going for prop firms which give you an 8% target, such as MyForex Funds, True Forex Funds, and E8 Funding, as well as the Funded Trader with its Royal Challenge program. These types of prop firms are very reputable, and they also give you an 8% target, which is much more achievable for you to hit within those 3 trading days, as I've mentioned before. Let me know what you guys thought about this approach and this risk management technique in the comment section below. If you did like this video, make sure to drop a comment on any further suggested videos you may have. Also, be sure to subscribe, as I'll be posting more prop firm related videos and keeping you guys up to date with my journey.